Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for May 3rd, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. So far, much of what we've predicted and forecasted has come true, which is to say, after the reversal from 1800s, we've kind of been stuck in mud around 2061s. And that's why I was mentioning before, don't get too excited if price pulls too far below that level or too far above it, because that's when price snaps back to value. It's a trading range market. And so we could continue to see this. And right now, the fact that price is sitting around 2061s, in my opinion, presents almost zero edge at all. Because not only is it value for the current micro composite range, it's also value going back to the end of last year and also earlier last year, where this entire zone right here, this is the fair trade level. Down below, it's 1912s. And so that's your trading range. We're in a large trading range market, 1800 to 2100. And when price gets overbought up here at the LVN, these participants that came in and bought, they get the stops run back down. And then once price builds out and takes value bid down here, it runs right back up. That's been the pattern here, and that's what we've been watching is the greater extremes of this range. The only problem is we've been in a super bullish market. That means that all counter trend rotations are eagerly bought right now. That's why you've seen some of these significant rejections off the lows. On the flip side, it's not as easy on the top end. You're not seeing the significant rejections. Instead, you're seeing much more distribution. And overall, these highs up here can churn up here for 2 or 3 months before we see a resolution. That's why I mentioned, when price rallies from 1800, should it reach 2061s, it will be to facilitate trade. And that's what we're seeing. And we could certainly continue to do that. And when we're chopping in a trading range, the best approach is to fade new highs, fade new lows. And right now, around 2061, there just really isn't any edge. Now, we have been in an aggressive uptrending market. So ideally, bulls would look to buy and squeeze. But again, the trend, in my opinion, has started to break down, and the initial price discovery phase is over. We've discovered 2061s, and we haven't gone from there. So just be careful around this zone. I think more chop occurs, and perhaps we see lower price discovery into 2000 to 2009. I think if we reach that area, it could be a fantastic spot to buy and bring it back to 61s. All right, let's take a look at the intraday time frame. On an intraday basis here, you can see prices sold off in after hours trading here. 2074s, the previous session's close, quickly offered, and you can see how price just dropped downward. We're now trading around 2060 again, and that's what I mentioned before. 2061s, composite VPOC. That 2077 half, by the way, that's the key level. That's the high of the August key range based off this contract. So that's exactly where we went before we sold off. Very bearish again, and I think any bounces could be seen as a selling opportunity. So perhaps if price rallies into 2070s here, this could be an area where bears want to defend over and over ahead of a potential push through to 2061s. So we'll just keep an eye on how this plays out here. But overall, we've seen quite a move in overnight pre-market trading. We're trading 92% of ADR, and if you look at our bear targets here, 2055 is an average range target. Now, I would keep an eye on 2055s here if you're a bull. You can see here 2055 is a key level. Price basically dropped into that zone, and then below it, double bottomed, and then rallied above it. So 2055 is going to be important to see if bulls can keep that area bid. If so, you could see a retest back toward highs. Otherwise, failure to hold 2055s opens up a retest of 2046s with the potential of more weakness. All right, let's take a look here at crude oil. Daily time frame of crude oil. One thing we mentioned before was this key range was going to be very important to seeing further expansion. And the first approach to the top of that key range, we were looking to fade, and it came within one tick of our fade level there. Perfect rejection, and then we saw a move back down. What I mentioned was this was going to be our primary idea for buying and squeezing toward 49s. Our secondary idea was going to be to defend the bottom of the range, and the primary idea played out. with that large gap down, tried to hold, and then we've seen a gap fill and a continuation ever since. Now prices have pushed through 43.85, reached the LVN at 46.65, which is an LVN we thought needed to be faded, and we're seeing a short-term rotation lower. The idea was that yesterday I mentioned bears would likely target 44.04s as part of the downside targets into 43.85, and so far you can see 2 days down, we're right into that zone. Now the idea is, do bulls come in and defend 43.85 and squeeze it into 49s? That's the idea I'm looking for. It may take another day or so to kind of test edges, but I would say if price trades below 43.85s, watch it very closely, because if price fails to hold below that level by the end of the day and closes back above it, that could be a signal there that we're headed back toward a test of new highs. And again, 49s is the upside level we're targeting here, because that is the HVN above, 49.08. That's the one I talked about before, that if price pushes through the top of this range and takes this HVN bid, the expectation would be a move to the next HVN above. That's 49.08. So far, everything's okay here. We got a nice little pullback. I would look for some sort of defense as low as even 42.60. But it's somewhere in the zone. Look for a rejection and then look to fade it back toward 49.08. Failure to hold 42.60 opens up a push back across the range toward 40.22 and perhaps even as low as 36.60. On an intraday basis, right here you can see so far prices taking 5-day VPOC offered, and then you see a drop downward, holding below the LVN at 44.60 to 44.65. 44.65 is the FOMC level. That's the FOMC announcement, and you can see how prices traded right to it and then held and took it offered. So right now that 44.65 is an important market generated key level to watch. Prices are attempting to hold below that level, and if so, you could look for bears to defend it for a continuation downward. Squeezing back above 44.65 opens up a rotation back toward recent highs at 45.35. All right, let's take a look at the gold chart here. One thing we saw here was gold explode through 12.75s, and that is the momentum that you want to look for when you think the stops are going to come out. Just a big time move from 12.75 up to 1300s. 13.0180 is the 50% key range expansion target. So when we formed the key range back in February, remember we were looking for a blow off top. Once we found it, we said let's look for a reverse move back to 1200. If we find a low there, that could be our key range to watch for distribution. And we saw that key range develop. And now we're seeing a push through the top of that key range, through the LVN 1275s, which forced additional stops. And now here's the 50% expansion target. And now we're seeing a little bit of weakness off that target. And I put a retracement up. So the retracement here, and I really don't even need all the levels. The level I'm really interested in is the midpoint of that range, because that solidifies a key range, an impulse range, right? So we have this low, and it rallied high into this high, and now we're starting to see some weakness. So what I told the trading room yesterday was, if this thing closes below 12.95s or around there, it closed right at it, look to fade a retest at the midpoint up to 13.01. So look to fade a retest at that area for a shot at pushing this thing back to 12.6730. Right now, that's the play. You got to get below 2-day lows, and then you got to hold below those lows in order to push back. But getting this pullback here could be very quick, and that could cement a 50% area here that brings in the key range. And that new key range will be very important for future directional forecasting. So keep an eye on this area. Holding below 1300 would be very important and implies a push toward 12.6730. All right, let's take a look here. Now keep in mind, if we do pull back into this area, it could be an area that is quickly bid. So if that area drops down, that could be a significant area for bulls to defend for perhaps another leg of upside expansion. So keep an eye. There could be some significant demand in this area, so you want to scale accordingly and look to defend accordingly if you're a bull. All right, let's take a look lastly at the NQ here. The NQ basically holding below the 4400s. You can see up here our idea that that was probably a short-term high, and to swing it against the opposite extreme of the range was right on the money. And now we're seeing how far can this thing go. Our idea that 4300 could be the next major area to watch was right in line, and that happened Friday. You can see that's the top of this key range. Bulls trying to keep that area bid for perhaps a move back up. And that's what I mentioned before. If we formed a price distribution down here between 3850 and 4300, now we're perhaps building a distribution above that area, in which case you would likely expect a rotation back up. Any failure to hold above 4300 though has a couple of major levels down, 4225, and then a couple of HVNs below into the 4100. So those would be some target areas to watch out for. But right now, the idea is if bulls can keep 4300 bid here, we could see a return back up within the range. Now let's take a look at the intraday time frame, because overall we've seen weakness to begin the day, and that could lead to more weakness ahead. Again, if these recent lows are broken, it could be significant, because what happened here recently was we had a downtrending market, and then a higher low came in and price pushed up to that area, kind of formed a little wedge and squeezed. Now we're back at that area, but holding below the squeeze point, which is 4340. That's very important. And ideally, bulls would like to defend in this area to get another rotation higher. So failure to hold, and I would just call it the previous session's low, opens up a major retest back at 4300, which, if violated, could open up that move back toward 4200 and below. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session and the week ahead. Good luck and trade well.